The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off this morning with markets in negative territory. S&Ps, we're picking up steam to the south right now. We were just at 5,700 about 45 minutes ago. Boom. S&Ps lose 40 points just like that. We're negative by 0.9%. And we're dropping off 52 points, 56.60 in the S&Ps. NASDAQ 100. Yeah, look at this one. We got some earnings last night. Nike down, FedEx down, Micron down. Triple witching Friday. Options expiring. We'll see. We're going to have some volatility today. We're kicking things off. NASDAQ 100 down by 1.1% or 220 points in the red. 19,656 the Dow. And you see, dipping below even yesterday's lows. Quite an acceleration yesterday, quite a decline. And we are below the lows of yesterday. You're off by 0.8 in the Dow, off 355 points, 41,931 in the Russell, off by 1.2% right now. Bitcoin down about $600, 83,540. Crude catches a bid yesterday, up to 68.65. We're trading at 67.80 right now. Gold contract, talk about volatility yesterday as well. We're up to 3,065. Yesterday, chopping around about 3,050. Just off those levels right now with gold, negative by $1 at $3,042. $3,000 for 1 ounce of that yellow precious metal. Gotta love it. Gold. The 10-year. We're coming back up to the higher price that we had yesterday. We're at 111.12 right now. That's putting the yield at about 4.2% on the 10-year. And jumping over to the dollar. Just chopping around, pushing that 104 price point. Quite an expansion yesterday, all right? You can't deny the acceleration we had going on yesterday. You catch a little bit of a bounce. We'll see if we get some follow-through, but we got dollar strength, which is interesting on the heels of that we have weaker yields, right? Yields drop, dollar strengthens. We're basically right back to where we were prior to 2 o'clock on Wednesday, okay? So no real huge move, but it is interesting that the dollar is basically right back to where you were at 2 o'clock, right? Zooming in on Wednesday, 2 o'clock. We were trading at about 103.8, 103.9, and we're right there. But meanwhile, over that same period of time, that's where you were in yields, right? You've had the 10-year trade a full point higher as the dollar is just chopping around. So we'll see the trends, trying to find a trend. This market is, and I think the trend's in negative territory. We got a lot to talk about today, folks, and let's start it off with triple witching. Yeah, $4.5 trillion. Is that enough exposure? Now, here's the way options work, folks, okay? If I buy an option to buy, 100 shares of Apple, okay? Let's do it. Apple shares, we're trading at 210. You go in and you're talking about, let's just say we go to today, okay? And here's how this is going to get funky when you talk about looking at it. When you talk about dailies especially, you're controlling 100 shares of Apple for about $1. Right? Yeah. Let's just say if it's $1 to buy an at-the-money put or call for Apple shares, all right? And this is a quick one just to realize when they say, oh, my goodness, $4.5 trillion of options are expiring, right? Well, here's the thing. One contract is 100 shares. Okay, so if you're buying an option contract for $1, you're basically paying $100. But here's the kicker. That gives you the underlying right to buy 100 shares of Apple, which is trading at $214, okay, which turns into $21,400. So the point is, you put up $100 today, you control $21,000 of Apple shares. I'm ballparking, okay? But you get the point. right? And yeah, 100, I mean, it's what, 0.5%. So you're getting basically 200 to 1 margin. It's the reason why people love 0 days to expiration options, okay? You're getting 200 to 1 leverage, and it varies, okay? There's going to be a lot of people that have a lot of options that are not as leveraged. That's an extreme example when you have an at-the-money put or the call, but you see how it goes the other way. You want to go the other way? You go out of the money? Here's a good one, okay? And this is why those numbers, and it's worth focusing on when you get a day like today. And we got a lot to talk about, 4.5 trillion, okay? And that is $4.5 trillion worth of contracts are tied to stocks, indexes, exchange-traded funds set to expire. You think that's a lot with 200 to 1 leverage? Well, check this out. What if I thought the market was really going to get a pop and I said, you know what? Today I'm going to buy an out-of-the-money call. I'm only going to put up about 40 cents to control 100 shares of Apple that trade at $10, okay? You don't control them. You have an out-of-the-money option that's worthless unless it gets to that level, which is why they give you that extreme amount of exposure. But again, you can see, you think that's what? That's approaching 600 to 1 leverage, right? So big numbers. They're not as that big when you really look at the numbers that people are putting up. But yeah, you look at the volume that we're going to have today, and it could be a big one. And look at how everything grows, right? This is the notional open interest before expiration. And yeah, everything just keeps growing, man. Index options, a big one up there. Look at this number, right? You got index options in the blue on the top, ETF options in the black, single stock options. I imagine a lot of that is index 0 days to expiration options. Pretty close. All right. Now, jumping around to a few of the equities, and we're not going to get bored today, folks. Look at this market. We got a lot to talk about. Nike shares, they're in trouble, down from 72 to 65. Micron shares, they're in trouble, down from 104 to 93. FedEx shares, down from 245 to 222. Okay, those were the 3 big earnings last night, wrapping up earnings season. They're all trading lower, and they're not going to help the market today. Yeah, can you get a bid on the open? Of course you can. Okay, but there's going to be a lot of pressure to the downside. I'm surprised it took until 8 o'clock, 8:15 for this market to roll over a bit. Now, getting into the numbers here. All right. China produced 18% of Nike-branded footwear. I wasn't aware of that, right? 117 manufacturing locations in China, 8 in Mexico. It's a tough one, man. How about revenue? Falling 9%. Revenue falling 9% to $11.3 billion. Whew. Market thought they were going to drop 11%. And that one's the one that stuck out at me. They have some problems, man. They're making a lot of shoes in China, and their revenue's declining rapidly. And Nike's a great company, okay, but multiples in earnings. FedEx, profit outlook cut again. Yeah. Adjusted earnings now going to be 18 to 1860. They were looking for 1895 was the analyst estimate. And you got Nike and FedEx and Micron. We'll get into it, trading lower. All right, we take a look at these S&Ps. Yeah, we're now below where we were on Thursday, and you are right where we're at for the lows of the week, man. Look at this. You got to love technical trading, folks. This is a critical area. We break below here. Where we're going, we're at the lows of the week. Stay tuned. 15 minutes to go until the opening bell. We'll talk some more equities. We'll talk some retail traders. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got Micron shares out with their numbers. There's your 5-minute trading down to 99. We got an initial pop, and it is interesting when you look at Micron. The AI computers, whatever they saw in that initial release, man, you pop it to 109, and it's a one-way trip to $99 in the overnight trading. FedEx, no pop there, but Nike did get a pop and then gave it up. So they saw something, but it's always about the forecast, as we know, in terms of where they're going. Now, you get into Micron, they're talking about margins on Micron. Okay, margins, gross margins, it's amazing, man. Being a public company, expectations are everything, but when you're trading at the multiples that these public companies trade at, you better live up to expectations. The expectation was for a margin of 38.4%. Their gross margins were 37.9%. The forecast for the current period is only 36.5, falling short of predictions. And check out this chart, okay? You know, chips can be a commodity business, right? And this talks about that there was a glut, and that's going back to, I believe it's 2023. That's their gross margin, comparable gross margin. The rise and fall, the cyclical nature. And I think you're seeing a lot of people a little worried, okay, that if they're missing on margins, you see that what happens, right? Margins accelerate and margins decline. Margins accelerate and margins decline. So when you're missing on margins, yeah, And the reason why they beat, yeah, there it is, right? It's the top and bottom line, man. The first move, top and bottom line. That's what the computers know how to trade off, man. $8.8 billion fiscal third quarter revenue is going to be, in the forecast, right? Top and bottom line, simple numbers. But then you dig into the margins, and everyone, that's where the AI trade bots that trade within seconds of those numbers being released, they're not quite there just yet. Because, yeah, they're looking at third quarter revenue, $8.8 billion. Market was only looking for 8.55. Profit of $1.57 a share compared with $1.48. But yeah, margins in focus on Micron. And this one has me thinking, all right? Just think a little big picture. We're talking chips. You're talking Micron, all right? And you're hearing a lot about NVIDIA. Okay, their CEO, they had an event going on this week. And I question the inherent bias and the inherent interests when you have the most powerful person in computing right now, right? The CEO of NVIDIA saying that he didn't even know there were quantum computing companies that were public, okay? I mean, imagine you're running that company. He's already said quantum computers are decades away. Now he's saying, I didn't even know companies existed I found myself saying, of course he knows that. Why is he saying that? You know why he's saying that? What's the greatest competition to a company that makes the only chips in the world that can drive AI computing on a longer term basis? Maybe quantum computing, right? Why would you not downplay that at every opportunity? Tell them that, geez, decades away is that technology. I didn't even know companies exist like that. It's such a joke. So just, realize he's talking his own book, right? And that is one of the biggest competitors out there. Okay, let's talk a little bit of retail traders, man. So we've had the market getting smacked for the last few weeks. It looks like we're going to potentially, when you go out to a weekly, right? Let's take this off. We bounce to the 382. And yeah, you put it on a daily, man. That S&P, as we mentioned, right to a 382, and we're rolling over. Okay, and when you put this on a weekly, taking off for some clarity there. Nope, we want to remove that drawing, please. Thank you. Yeah, we're talking about another red week. 6,100, we're down about 500 points from the highs. And yeah, we have a little bit of a rollover. You take a look at the NASDAQ 100, same action, man. That's a weekly. Now, we'll see what the volume comes in today, but probably not going to compare with the last. It's triple witching, so you never know. We might get an acceleration, and you will get an acceleration at the end of the day. But yeah, we got a rollover, okay? But now, check this out, right? Retail traders, man, we got two articles. Check this out. Retail investors are buying the dip. Money-losing retail crowd keeps buying stocks as the market teeters, all right? That one's out at 5:30 this morning. That one's out at 6 a.m. this morning. Completely different articles, different journalists, different articles, okay? Investors, individual traders pump more than $12 billion into U.S. equities the week ending March 19th. Yeah, isn't that crazy? It's not crazy, but they're dip buying, and we'll see where we go, man. Private clients, okay? Trading data from Bank of America showed private clients have been net buyers of U.S. equities for the past 14 weeks, while institutional clients were net buyers for the first time in 3 weeks. Hedge funds, net sellers to the fifth straight week. So what's happening here? Retail traders are just saying, nah, we're just going to keep buying, man. We're buying the dip. We're buying the dip. We're buying the dip. They've been net buyers for the whole way down, retail traders. Okay, you finally have institutional clients saying, you know what, we've had a pullback here. Maybe we'll look for a little bit of an opportunity. And then you have hedge funds saying, no, we're still selling. Yeah. Yeah, and they make the point here that, we are getting, it's a great point, that we're getting a lot of soft data, right? Market sentiment. I think we got the Michigan market sentiment, very bearish numbers for people. And then you look at this and you see that retail investors are net buyers. Now, that's counterintuitive in that if people are saying that they're super bearish, right? The market sentiment is super bearish, And meanwhile, all the retail traders are still thinking that we're going up. Well, it's something to pay attention to. Now you go over to this one, okay, and as they're talking about here it is. For 16 separate sessions in this year, day traders snapped up more than $2 billion of stocks. Yeah. A pace of buying that occurred only 4 times in the previous 2 years. Whew. There's a lot of pain going on in this market right now, man. And we are like right near the all-time highs. So when you think that we found a bottom, that's not how a bottom gets found. I know you're not. No one out. I'm not saying no one, right? I think we're all well aware that we've had a stratospheric run, okay? But look at those numbers, man. There is no fear whatsoever, man. You got tariffs everywhere, all right? And then the last article that we'll talk about, okay? Bank of America, tariff risk dismissed as stocks get a monster inflows. Everybody's still buying. Global stock funds, $43 billion in inflows through Wednesday. We got a lot to talk about. We're coming back for the opening bell. S&P's negative 60. Don't go away.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open, and we'll see if we can find a bid. NASDAQ 100 down about 1% or 200 points right now, 19,668. We got the S&Ps off about 0.8%. Dow off 0.8% as well. Russell off by 1.2%. And it is interesting that we basically bounce right at the weekly low, as I was talking about, man. Tuesday's low, 56.50. Maybe we miss it by a penny, but yeah, you're talking about a critical area, and S&P's off by 43. But just to finish the thought of the basic premise of what we're talking about here, the market has gotten decimated at the same time that we've had dramatic inflows in this market, okay? Individual traders pumped $12 billion into U.S. equities the week ended March 19th. What happens when they're selling? What happens if retail traders aren't pumping billions and billions and billions of dollars as this market trades lower? Fear is not in this market just yet. Not even close when you're seeing that, right? Think about it. There hasn't been a single week yet, okay? And I know this is like general information. We're just like spitballing, all right? It's not technical. I'm not going over price and volume. But to a certain degree, it is volume, okay? My dad always used to say, right? You go in the store and less people are in the store and they're marking up the prices, right? No, that doesn't make sense, right? You're trading higher on lighter volume. In this instance, the market's trading lower and we still have buyers that are flooding in on a retail basis. You look at it, we haven't even had, like I just said, talking about the hedge funds being the only ones that have turned to sellers, retail is still a buyer. We haven't had a retail outflow. That's just a dicey scenario when the market's already gotten decimated. What happens if we do get retail outflows? What do we have to reach for retail traders to get a little worried and to stop buying? Dicey scenario. All right, let's see how some of the equities with earnings are opening. We got Nike shares down about 7.7%. Micron, as I mentioned, yeah. Pay attention to the margins, okay? This chart on Micron, and I don't trade Micron right now, but I may look at it, man, because that's what they're looking at, okay? When you start missing on margins, you see how that can roll over, right? And it's amazing that you're missing at 38%, but look how quickly they can go from margins of almost 50% for a whole year, and within 6 to 9 months, you're losing money for a 12-month period until you roll back to positive. So I think the market is a little worried there, to put it lightly. And you're seeing that reaction on Micron shares today, down by 8%. Yeah. Whew, FedEx down 11%, man. Yeah, man, Steve Rhodes did a great job. He was doing his program at 8 o'clock this morning. Yeah, look at this chart on Nike, man. Whew. I know, right? You're bumping in. I mean, next stop's probably $60. You got a flash low out here of March of 2020, brings you down to $60. But we are breaking decisively below anything we've seen since then, and realistically $60. But what's stopping it there, man? You know, you got a big volume bar out here. You're going back to 2016 prices, almost 10 years ago on Nike shares. Longer term picture of FedEx. I mean, I think of our man Basil Chapman. Nice round numbers, symmetrical patterns. We're at 220, and boy, if that's a symmetrical pattern, man, FedEx is going back to 100, right? Some dicey setups in this market right now. Let's take a look at the big dogs. As the market pulls back on Friday, triple witching, we got Apple. They catch a bid on the open. There you go. Apple, only down about 0.7% right now. We jump over to Amazon shares, down about 0.8% right now. Google, a similar 0.8% in the red. Meta had a nice day yesterday, gave it up. You talk about some volatility, man. Again today, Meta back in the positive by 0.4% right now. NVIDIA off by 1.6% right now. All right, let's check out some of the banks. Yeah, JP Morgan chopping around. Bank of America shares right now, negative by 0.3. Netflix down about 0.4% right now. All right, we check out Bitcoin. 83,300 off 87,000. We go to a daily on Bitcoin, just chopping around at that 50%, about 80,000. All right, what else have we got going on? If you haven't watched The Big Short, it's a great movie, man. It is. You love finance anyway. Danny Moses. And yeah, he was betting against 2000. He's out there talking about tariffs. Bank of America is as well. And yeah, inflows again, right? Global stock funds recorded $43 billion. Now, you talk about global versus U.S. Okay, global investors are not anywhere close to short U.S. or global equities. They're not even close. Okay, they're not worried yet. $43 billion in inflows the week through Wednesday. Whew. Sometimes the expression, right? You don't know what you don't know. And we are on quite a front right now with these tariff risks. And with market prices where they are, I see a lot of risk in this market right now. And that's it. You know, you got inflows that aren't stopping right now. And on a bigger term picture, there's a lot of optimism. The earnings multiples in these equities. And then you look at volume. The volume just keeps dropping off. There's no fear yet. There's no sign of strength whatsoever yet. Those are a dicey scenario, man. That's your S&P. On the NASDAQ, we caught a little bit of an acceleration of volume yesterday, but nothing compared to the slide lower. We have yet to find one day of acceleration where we really get buyers. The only thing we've done is maybe stem the tide to lower prices. You stepping in front of that train? I'm not stepping in front of this train just yet. I'm willing, okay, to forego an opportunity cost of missing buying the dip right now. And that's not where retail traders are even close right now. We jump over to Tesla shares, up by 1.6%. You catch a pop to 240 right now for Tesla shares. All right, we check back in on yields. Let's see. 10 years sitting at about 4.2%. Yeah, and that dollar right at 104. You know, the dollar was looking weak, and there's nothing wrong with changing things a bit, man. Dollar was looking weak, but boy, that was quite a pop yesterday. Haven't quite figured out yet how yields are going lower, dollar's going stronger, but we're keeping our eye on. And that is a pop. And you break above this area, yeah, maybe you got a little run to the upside. Because that is a sign of strength that we got yesterday in that dollar. Oof. All right. The action's beginning. Gold on a Friday. Gold dropping from 3,045 to 3,025 right now. We take a look at silver. Yeah, not quite the same move to 33.50 right now. We take a look at copper. Chopping around $5. This one. And quite a run for copper, pushing the highs we had back here last May. Copper at 505 as markets off about 50 in the S&Ps, NASDAQ 100 off about 237. Stay tuned, folks. We'll talk some more equities. We'll talk some markets. Triple Witching Friday. Markets in the red. Stay tuned. We're coming back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. S&P's a little bit of a bounce going on in this market right now. Negative by 42 points at 56.69, but the day is young, as Basil says. The day is young. And on triple witching, yeah, you better prepare. And remember, like we kicked off the beginning of the program, so we're talking about triple witching, okay? I closed that article. The number there is $4.5 trillion. There it is. Now, that's the notional value, folks, of options that are expiring today. And the reason why people love options is because of the leverage that you can have. And as I just stated, when you're talking about buying options that are expiring, you're talking about the notional value of options that expire today. A lot of times you're getting 100-to-1 leverage, 200-to-1 leverage, 600-to-1 leverage if you're going out of the money, okay? But that does not change the fact that options are an ever-growing. Remember, we used to talk triple watching, quad witching, okay? Look at the rise of the notional open interest, okay, before expiration. It's a big number. They're on the rise, and so they're just going to have a bigger and bigger impact, and it's just one of those things that you want to look, especially towards the end of the day, as we get a little volatility. All right. What else we got pulled up here? Yeah, I was reading this morning on Bloomberg. Not pertinent yet, but it could come up. You know, Trump, he's fired a couple people at the FTC, okay? And it is interesting to take a look at that if he can try to fire the FTC, he can fire Powell. And, you know, he said he's not going to do that, but now he's saying he should cut. And it's just one of those risks out there, and I don't think he's going to bring that. I think he's this is Trump, that he's being a lot more methodical here and choosing his battles. And as opposed to this one that might cause market angst, he's probably going to wait it out. But it is interesting that, and it just points to, if you can fire the FTC, you can fire the Fed, because it's the same exact reason. The reasoning's the same. And yeah, I get it, okay? And one of the people in, you know, the Heritage Foundation, the conservative think tanks, they're saying, man, you know, what's going on? The president has unilateral power, et cetera. Okay, they're making that case. But if you're making that case and he can fire Powell, folks, we are not going to be best served by a billionaire real estate investor telling the country that we need lower interest rates, okay? There's some sanity needs to come into things, and it's not political, okay? There's a reason why the Federal Reserve is supposed to be impartial, and nothing is impartial. Nothing is unbiased. You go on the whole line, okay? But you have to go bigger picture, and there's always going to be the inherent interest to lower interest rates, free up capital, and inevitably, if that's what you do, okay, then what happens? We get the ebb and flow of an overheating economy and an underheating economy. But one of those risks lying out there along with everything else. What else we got pulled up here? Let's see. Accenture. Is that how you pronounce it? How do you pronounce their name? Nevertheless, they're getting pummeled, man. And this equity. So where do they trade over? In France or something? The FTSE maybe? Let's see how they're doing so far. What I found so interesting is this equity was trading at $380. For the people in the know right now, okay? For the people in the know, this seems like a no-brainer, okay? Because you get into this company, Accenture, right? I think that's how you pronounce it. I knew I was missing. Accenture, maybe. Look at this number. So their CEO said in a fiscal second quarter earnings call that the company's federal services business has lost contracts with the U.S. government. Federal represents 8% of their global revenue and 16% of their America's revenue last year. Anybody who is relying off U.S. government federal revenue to the tune of, what is that, 1 out of 7 U.S. dollars? You better watch out, man. I don't know how this stock was trading up to a high like we just saw in February. When they are relying on 16% of their revenue in the U.S. for federal revenue. Yeah, and the GSA has told all federal agencies to review their contracts with the top 10 highest paid consulting firms. That's going to be a headwind for 4 years for this company, man. So, surprised they rallied up to even February. Because election day, they probably should have gotten pummeled if you really did some quick math. And, we got some great comments in the den, right? Jimmy, totally agree, man. There's nothing wrong with wanting lower interest rates, right? Debt. But it speaks for itself when you start allowing the president, because what president, okay, here's the kicker. What president is ever going to bring the pain when it's necessary of higher interest rates? That's the problem you want to have here, folks, all right? Yeah, it's real easy to have this debate, okay, and say unemployment's 4.1%, we got so much debt, we got to bring interest rates down. Okay. What happens on the other side? That's the reason why you need that impartiality. The other side. You don't, need it on only one side. It's the other side. It's doing hard things at times that politically are not appealing for the best interest in the long-term health. And boy, Heathrow, right? My goodness. Quite a fire going on in Heathrow. You got a mess over there, 1,300 flights. Man. Quite a fire over there. What else have we got going on this morning? Yeah, good. Decent article from Wine Enthusiast. They got one gentleman here. I was clicking on this. Who's this guy? Stephen Nordoff. You know what I found myself saying? How did this guy get a free plug, man? You're looking for a lawyer? I don't know. This guy sounds like he's doing well. He spends $25,000 a year. And hey, more power to him. It's a collectible deal. He's buying, and I click on it, and yeah, there he is. And what's he do, folks? Family law, intricate family law, but seems like they do just about everything. But nonetheless, when you go back, so I found myself saying, man, how does that guy get into that article? That's quite a plug. They give him a hyperlink to his webpage. Right? How does that work? Think about that for a second. You got a Bloomberg article talking about that you're an astute wine investor who's going to pause your purchases because of tariffs. And meanwhile, you got a plug with a link to your direct website for your law firm. I don't know how that one works out. Nonetheless, I clicked on it. I said, who's this guy? Why are they cherry picking this guy? I don't even know. okay? But guess what? He's going to stop spending $25 grand a year on wine. Not surprising. Not surprising in the least. All right, folks, one more segment. We got markets chopping around in the red. S&P's off by 40. NASDAQ 100 off by 166. Triple Witching Friday. Stay tuned, folks. Coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets in the red, but yeah, we got a little bit of a bid going on since the open. We got the S&Ps right now, negative by 43. NASDAQ 100, we're off by 157. You got a bounce going of about 100 points, 19,722. We keep our eye on the dollar. Pushing 104 right now. We're above that point, 104.01 on the dollar. We check out gold. Yeah, we got some movement on Friday, man. It's been a while since we've had a rip like that in gold. Dropped $30, just like that, man, from $3,045 to $3,016. And we look at yield sitting at about 4.2% right now. Ooh, Amazon gets it back. Amazon almost flat right now. Apple gets it back as well. All right, we got a little bit of a bid going on. You go over to Microsoft shares, still slightly in the red, but they catch a bid as well. NVIDIA off by 1.8%. We check in on the company's getting pummeled on earnings. Nike off 8% right now. Man, Micron off by 7% right now. And FedEx off by 11% right now. Tough numbers across the board. We jump over to MicroStrategy. And man, that is a great post from our man Jimmy in the den this morning. Where is it? I got to find it. Talking about Michael Saylor. Come on, where are you? Can I pull it up quick enough? Let me see if I can. Here, I can slide this over. Jimmy, great post, man. Is that the exact day? 25 years ago to the day, man. Michael Saylor loses $6 billion in a day. Get your spikes up on the back, folks. $6 billion in a day. Why? Because they were fixing their books. Okay, period. End of sentence. Fixing their books. You can call it what you want. They had a civil agreement, right? But nonetheless, that's what the share price was doing, folks. You dropped like $80 in one day down to, or no, it was at $240. In one day, you dropped to $80. And before you knew it, you were down to like nothing, $2 or something. And meanwhile, now he's the face of Bitcoin leverage. Be careful, folks. MicroStrategy down 0.9%, but thanks for posting that one, Jimmy. Man, history repeats, folks. Be careful. Stay tuned. Thanks so much, folks. I'm coming back for the 10 o'clock update. Have a great Friday, everybody. Stay tuned.